Hello traders, Rich here and welcome to a new episode on how to analyze any chart from scratch without using any indicators, just by applying basic price action concepts and market structure 101. So let's get started, and as usual, cheers. Today we have episode number 12, which is a crypto instrument, this time Helium, or also known by its symbol HNT. For those who aren't familiar with the series, we went over 11 episodes like a forex pair, a crypto instrument, a commodity, an index, so you can basically apply the strategies and trading style on almost all markets. So let's do it. Grab a coffee or tea, sit back, and enjoy it. As usual, I'll turn off my camera to focus on the chart. For those who already know me who watched the previous episodes, we always start from the higher time frames, daily and weekly, to know where we are in the market. Are we overall bullish, bearish, or stuck inside the range? And half of the work is done here on higher time frames, because once you know where you are in the market, you can zoom into lower time frames and look for setups. For example, if you are bullish, we'll be looking for a trend following by around the lower band, and of course sell setups around the upper band, which I consider an overbought area. Vice versa, we'll be looking for sell setups around the upper band in a bearish market and buy setups around the lower band. Of course, the classic one, the horizontal range, we'll be looking for a sell, for a buy, until eventually the range is broken downward or upward, right? We've got three types of rejections. The first one is a typical supply and resistance, where we have many failed attempts to break below or above a certain level or area. The second one is a non-horizontal supply and resistance, also known as a trend line. The third one is a supply and demand zone. So when we have an aggressive movement upward, that's a demand, and as price retests it, we'll be looking for buy setups. Vice versa, when we have an aggressive movement downward, we have a supply zone, and as price retests it, we'll be looking for the setups. So let's do just that on Helium, HNT, to know where we are in the market. And then, of course, we'll zoom in to lower time frames to look for setups. Of course, as I always say, when it comes to crypto and stocks, we can't really find typical supply and resistance because we don't have enough data. Enough data to draw a big key level which extends over a period of time. That's why we always focus on the previous high, previous low, supply and demand, and trend lines. But anyway, let's do it and focus on round numbers. Of course, we'll try to cover as many ejections as possible. So the way to do it is very simple. You draw a random line on your chart, start from the top, and drag and drop it in a way to connect as many swings as possible. I always go for three rejections. Okay, of course you can go for two, but three is always better. So start from the top. Of course, we'll keep this one because it's the all-time high for Helium, and then we'll go lower. Of course, we'll also keep the 50, as it's also a very strong round number inside this big chart. From 0 to 60, the 50 is indeed a massive one. And then if we go lower, we can only find one rejection around here, so like for now I've skipped it. We'll be seeing it better from daily time frame, but I want to show you a massive one. You can clearly see one around this area. So it was previously acting as a resistance zone, then price broke it upward in an aggressive manner, then on the retest it's acting now as a support zone, and vice versa, broken downward, now acting as a resistance zone. Okay, so it's of course a very strong one. Let's go for 25. So now we've got our 50, our 25, and yeah, you guessed it right. We also got the 10, right? And also, of course, the 5. So these are the strongest round numbers in this chart. Of course, we also got the 30, 40, and so on. But for now, let's focus here to keep this video short. Let's go for blue, and of course this is an entire zone and not a laser level. So the way to do it, you can draw two levels, for example like this, and make an offset for it. That's our entire supply and resistance zone. The second way is you can go for the actual rectangle, the actual zone, okay, or you can keep it as a level to keep the chart clean, but treat it as a zone. Okay, so let's keep it this way to keep the chart clean. If you move forward, we've got one around here. As you clearly see, multiple rejections from this area. It happens to be around the round number 20 or even 19, but we've got the idea it's an entire zone. Let's go for green. If we go lower, we can see multiple rejections from this area, who has been acting as support previously, then broken downward, now acting as a resistance. Happens to be around the round number 11 or 12, but let's keep it 10 because it's a strong round number. But of course, it's an entire zone just like this. Okay, Last but not least, as mentioned previously, we've got the 5 round number, which is also lining up with what? With a demand zone, as we had an aggressive movement upward from this area. So basically, this is the entire demand zone from like 3.5 to around 5. Okay, anyway, let's keep it this way, 3.5. So that's our first demand zone that's still fresh. So yeah, helium can still go down, fill it before going upward. Vice versa, we've got a supply zone around here, but I will not draw it because it's already around the 25, as we got an aggressive movement downward from this area. Okay, so this is basically it for supply and demand zones and for support and resistance. Now let's go for trend lines. I can see one here, but let's draw it better from daily time frame. The idea is that we want a trend line or a channel or a wedge pattern, or whatever you want to call it, which engulfs the overall movement. In this case, we are bearish, right? So we want to find what engulfs this overall bearish movement. So we try to connect the highs, which I also call the outer trend line, okay, which is engulfing this overall move. So let's do it. I always go for brown for the ones from daily time frame and like rejection time frames. So here we go. We can connect 1, 2. We could look for a sell around this area, also rejecting the resistance. And anyway, let's focus on the current price action now. That's it, right? Of course, again and again, it's an entire zone. Even though it's a non-horizontal resistance, you should treat it as a zone and not a laser level. So how to do it? You can always go for the offset. So you press on control and hold, and you do it like this. It's an entire resistance zone, a non-horizontal one. But again, to keep the chart clean, I'll keep it as a level, but you have to treat it as a zone. So we don't really enter a buy just because a random laser line is broken upward. The exact same thing on like the horizontal ones. So just a small candle with a wick breaking upward, but it's not broken. For it to be broken, we need an aggressive movement upward, okay, breaking all the possible scenarios of a support or a resistance. So for now, the 10 is still acting as a resistance this entire area, as I showed you, if you remember. So from 11 to 10, so from 11, 12 to 10, so that's basically it. But I'll keep it as a level to keep it clean. So that's that's the upper bound. Of course, we can make it a little bit lower or higher, okay, but as I mentioned, it's a zone. So now we have to find the lower bound. What I do is I make an offset for it like this, but I try to connect as many swings as possible. So in this case, I make it like this, and then I'll make it follow the price action more. So this is what you will have. You will have a wedge pattern, right? And the wedge pattern is a stronger bullish reversal pattern. In this case, it's a bullish reversal one than a channel, because when you have a channel, chances are that you will have like low lows and lower highs, and you've got equal impulse movements. However, for a wedge pattern like this, yes, the bears are still in control, managing to make low low, but as you can see, like the bears aren't strong enough to make bigger impulses like previously. So here we've got the same distance of impulse, while here the impulse movements are getting smaller, and you can see it, the shift in momentum in action. So we can see that this is happening now, going flat, and we're waiting for the bulls to take over to back for the next bull run. So we can see it that we've got this steep impulse movement going lower. Let me draw it better. Here we go. That's our second one, and now that's our third one. Okay, and now we are going flat. So if you put these aside and compare it, you can see the shift in momentum and action. So this is a big one, now getting smaller, not even smaller now, it's getting flat. Okay, which gives you an early alert that a potential reversal might happen, that the bears are exhausted, but they are still in control, managing to make lower lows and lower highs. Now, after this flat impulse movement, we've got a range. Okay, so which is now in phase 2, which is, as you can see, the accumulation phase. So now we'll be waiting for this one to be broken upward, which would also be what? Which would also be the last major swing high broken upward, which would also be what? Which would also be a breakup of the resistance, which is around the 12, right? So from 12 to 10, that's our resistance. But let's delete it, okay, which happens to be here. I don't know if you can see it from the video, but I have my alert here, right, which is, as you can see now, because if this one is broken upward now, okay, then the chances are that the bulls would take over and we will have a shift in momentum. Okay, so like that's how you start from the higher time frames and zoom into lower time frames to make sense of the chart. That's how you combine different tools to know where you are in the market and what you are waiting for. So basically here we want the bulls to break every possible rejection area that might hold the price down before we enter the buy. Okay, like especially for spot traders who would like to hold this one for the long run. Of course, for margin traders, and now this is the daily time frame, but you can zoom into lower time frames and look for setups. So for margin traders, if you enter buy here at when it's broken upward, then the stop loss would be below the major low. And you will target 1 to 2 risk to reward ratio, or like it depends on your risk management, which would be around the upper resistance area. Of course, you can zoom into lower time frames and look for setups, but for now, we found this one here. And if you zoom out, you can see it even better. Now going down, wedge pattern, we got a shift in momentum in action, but the bulls didn't take over yet. We're waiting for the bulls to kick in by breaking above this level right here around like 12.8. Then the bulls will take over. And of course, if you would like, when this happens, we'll be expecting what now? A shift in momentum, and price, instead of making lower lows and lower highs, now we'll be expecting higher lows and higher highs. So that would be our first impulse responsible of the shift in momentum. And on the correction, like for those who would like to zoom into lower time frames, you can zoom in now and look for a trend following buy to catch the next impulse movement upward. Okay, this is our first scenario. Meanwhile, and until this happens, until we have this break, HNT would be overall bearish and yes, can still trade lower to form a double bottom before we trade higher, or even retest the trend line, dive inside this lower 5 demand zone, fill it before trading higher. In this case, as we trade lower, around this area, we'll be zooming into lower time frames and look for buy setups to catch this movement upward, because we will get a rejection zone around here. Okay, that's how we previously were looking for a buy here, because we were around the lower trend line approaching the 5. We will follow the same logic. Here we go. So these are the two possible scenarios for helium: waiting for this to look for a buy on lower time frames, and then wait for this for the bulls to take over from a long-term perspective, and you can enter a buy spot, or you can anyway trade it on margin as well. It depends on your risk management and trading style. So that's basically it for helium. Let me know if you like let me know if you like the content, and like feel free to request any instrument that you would like me to cover next. I would be happy to do it. If you have any questions, leave it in the comment section below. Best of luck, and I will see you on the next one.